Richard Yetsenga is Group Chief Economist at ANZ Research. Richard, good morning. Great to have you with us here on the program. Thanks for joining us. A lot on the table. The big one, of course, we'll see what happens on the GST, the local front, because the government is trying to, I guess, at some level, buffer the economy away from the impact of some of these trade shocks, etc., as well. And that's up ahead. But with regards to Russia, Ukraine, and an end to the conflict aside, after what has transpired over the last 72 hours or so, has the chance of that gone up, gone down? Or is the same, Richard? What's your sense?
I think, honestly, the markets are taking all of this as the news comes out. Obviously, there was a lot of speculation into the weekend about what might happen. I really don't think, though, markets are trying to be too forward-looking on these sorts of events these days. I think they're kind of more comfortable with the idea that they'll wait and see if something is delivered. This conflict's gone on for a few years now. The US administration attempted very early to try and reach a peace agreement very quickly, and that obviously didn't transpire. So there's a certain amount of Groundhog Day about this, and I think markets will just take the news and see where we are. On the GST, though, I would say it's important, I think, for India's long-term potential that these changes are done with a view to what the right structural tax system is, rather than trying to use the GST system to buffer against current shocks. Shocks, of course, come and go, but the tax system is much, much more difficult to change.
Yeah, Richard, that's a great point, and that this is what we'll be, of course, debating with a lot of people throughout the day, because it's a big change that India is right now proposing, doing away with 2 tax categories entirely, bringing it down to just 2, and there will be some revenue loss. I think officials are already acknowledging that. They're hoping the buoyancy in the economy will make up for any loss in revenue. Your thoughts? Right way of looking at it? Right way to go?
Oh, I think thinking about that trade-off in India's case absolutely makes sense. If you can deliver some meaningful reform that frees up resources, then I think you can reduce the average rate of tax. I have a different view about how successful that might be in the US, but certainly in India's case, it's possible. And of course, most economies only have one GST or VAT rate. Few have 100% coverage, so most have some exemptions, but India's kind of 4-level tax system, of course, has been a bit unusual. So bringing that back to 2, which simplifies the system a lot, you could argue reduces half of the complexity in the system. I think that's a big step forward.
Hi, Richard. Good to see you, Ben. Well, we've got an upgrade as well out of nowhere, on Thursday itself. And that came after many, many years. What is your reading of the situation? Because some were doubting the India story. And just take a look at this bounce back rating upgrade. Your take on it?
Oh, it's positive, no doubt, but it doesn't change the strategic picture. The rating changes for the most part reflect what the fundamentals have already done, or at least the direction in which the fundamentals are tracking. And of course, rating changes at certain cusps matter much more. But I think in general, you might get a 1-day move or a 2-day move on your typical rating shift, and then that's probably about it. And I think that's appropriate this time. The questions about India are well known. Great performance over the last decade or so, great potential over the next couple of decades, but let's see what reform comes through to actually validate that potential.
Got that, Richard. The only thing is that we did not even get that 1-day reaction. That's how negative the sentiment is. And by the way, the Nifty is the only market in Asia which is negative this month. So yeah, sentiment has been poor, especially because FIs have been selling. Thanks very much, Richard, for joining us. Good speaking with you, and good to get that perspective. We'll take a